Hello traders, over the next few weeks, I want to start doing a few sessions on chart patterns, this technical analysis. Now I'm going to talk in this video a little bit about fundamental analysis too, and explain the difference between those two. But I think in the coming weeks, you're going to see probably 6 or 7 sessions where I get into the analysis of technical chart patterns, things along those lines. So I hope you enjoy this series. If you do, comment, give me a thumbs up. Technical versus fundamental analysis. Those are the two main types of analyzing something that you might want to buy or sell. So to explain the difference between those two, with fundamental analysis, you're trying to determine what to trade. What do you want to buy? So you're going out, and more often than not, you're going out and you're examining the company's financials. You're looking into their earnings reports, things along those lines. And ultimately, that's going to help you decide what to trade. And then technical analysis will help you determine when to trade. And by when to trade, what is a good price point for entry? If you're already in a position, what is a good price point for exit? So those are some of the things that we're going to try to look at today. Now, this is regardless of whether you have a stock position or an options position. These will come into play in both of those situations. So what is technical analysis? Just to give you a little better insight into that. In technical analysis, we're using price, volume, in some cases indicators, that will help us forecast future potential price movements. And of course, none of us have a crystal ball. So this is an analysis that's giving us a best guess of potential future movements. Of course, there's no guarantees. But once you know what you want to own, so you've done your fundamental analysis and you've determined that you want to own XYZ stock, or maybe you already own it and you want to sell XYZ stock, using technical analysis is a great way to help you decide what is a good buy point, what is a good sell point. So again, if you already own the stock, technical analysis can help you decide a selling point. At the end of the day, it helps traders identify repeatable patterns with statistical probabilities. And we're going to actually look at the statistical probabilities associated with some of these as well today. And the concept of technical analysis is based on the idea that price action tends to repeat itself. And it repeats itself largely because of market psychology. People see a particular image or a particular pattern. The more people that see and recognize that same pattern, the more likely it is to be acted upon. And so we're also going to discuss briefly, does news impact technical analysis? Because one of my big questions when I was learning was, okay, you got all these patterns and things that happen, but what if some great news story comes out? More often than not, the news will just accelerate the move to a certain point. And again, we'll probably see some examples of that as we go through our slides here today. Fundamental analysis to me is like deciding where you want to go on vacation. I really want to go to the Caribbean on my next vacation. You've done your research, you've ruled out Hawaii, you've ruled out whatever, you've decided you want to go to the Caribbean. That's your fundamental analysis. Now, your technical analysis is when you go and load Google flights up on a website, and now you're tracking on a daily basis what those airfares are going to cost you. All right, so that's what the technical analysis piece of this puzzle is. You've already made the decision to go to the Caribbean. Now you want to get the best price on airfares and hotels. So same thing with stock. You've already decided that you want to buy a stock. Now decide what's the price you want to pay for it. So what is a chart pattern and why do they matter? A chart pattern offers repeatable shapes, for lack of a better term. You can almost think of it like the Rorschach test that psychologists would give you. You hold up an image and what do you see? That's what we're going to go through here. And again, the more people that see the same thing that you see, the more likely it is to be acted upon. The charts also often reveal institutional footprints. So you or I going in buying 100 shares of Apple, we are not a blip on the radar. But a Warren Buffett going in and buying 500,000 shares of Apple, that's going to leave a mark. That's going to leave a point in a chart pattern that we can see. We're not going to know it's Warren Buffett in there buying at the time, but you will see certain things happen on a chart that tells you something's going on here, okay? And again, we'll see examples of that coming in our upcoming videos. So chart pattern's basically a visual roadmap. It's crowd psychology translated into a visual guide that helps us see market action and market movements. And again, the more traders identifying the same pattern increases the likelihood of a predictable price move. And another analogy here, fundamentals are like knowing the recipe for a cake. Your technical analysis is when you're sticking the toothpick in it to see if it's done, okay? So that's another way of potentially looking at that. So we're going to talk briefly about the types of charts. So the most common chart that used to be out there back in the day, not so much anymore, is a simple line chart. All a line chart is at the end of each day, whatever that stock closed at, it puts a dot on the chart and they connect it with a line. So that's a line chart. That's charting in its simplest form. Then we started as computers, and I'm certainly dating myself, but when you get back into when I was trading in the 90s, yes, that's the 1990s, by the way. When you get back to where I was trading in the 90s, it was very difficult to get a more elaborate chart, a chart that might have things like what this right-hand chart has on it, which is the open, high, low, close. That was a massive amount of data at the time for a computer to crunch. And I'm on a dial-up modem on AOL going, dee, trying to, most of you probably don't even know what I'm talking about. So I apologize for the digression. But it used to be that it was difficult to get a lot of details in a chart. Now the most common charting path that people use is a candlestick chart pattern. So this is what most people tend to look at today. If you go to most of your trading platforms, they have the ability to turn this function on. I would highly recommend it for helping you to read charts. And we're going to see in a minute why there's so much information that you can gather here at a glance and how to interpret that. So I'm going to talk briefly about the history of candlesticks. So maybe not so much the history, because the history goes all the way back to ancient Chinese times, a few thousand years ago, actually. But the anatomy of a candle is really what's important. So with a candle, there's going to be 4 price points. You're going to have the high, the open, the close, and the low. Those are going to be the 4 points that if you look at any candle, once you learn how to read candles, you can instantly see that. You will instantly know what that candle is telling you. Now, the wicks often tell the tale. These are the wicks, where this part here is considered the body of the candle, okay? Now, the wicks can tell a story because if price gets up to this level, and all of a sudden, by the end of the day, that price is pushed back down, that tells us that something was going on there. And we'll look at examples in a minute, but there's ways of reading that kind of tells a story that we need to pay attention to. The body size here matters. If we've got a candle like this, it means one thing happened. If we've got a candle where the red body comes all the way down to the bottom here, and this is all filled in red, and at one point we're all the way up here, that tells a little bit of a different story to me. That tells me that people were buying this thing, but then some larger money or some sellers came in and overwhelmed those buyers. And by the end of the day, there was a lot more selling happening here than there was buying. That's important for me to know as a trader. What about the candle color? Candle color is pretty simple, okay? If the candle is red, that means that the close is lower than the open, okay? It's literally that simple. If it's green, that means that the close is higher than the open. So nothing more to read in there. Now, these candles can be off-centered. In other words, this red candle could be all the way up here in a chart pattern. But if it's red, even though it's higher than this one, if it opened high and closed lower, it will still be red. In future sessions, we'll actually get into starting to analyze some potential trade ideas and concepts and how you might apply those teachings into a chart pattern. So we'll look forward to seeing you there.